obviously this is something that we will be tracking. Thank you so much for all those updates. All right, let's move on to some other stories coming our way. Shares of gems and jewelry major Rajesh Exports Limited continued to witness sharp selling pressure for the second consecutive day, hitting the 5% lower circuit limit on Friday, June the 5th. Now the stock declined nearly 5% to hit the lower circuit at 99.45 rupees on the BSE. On the NSE, it tumbled to 98.73 rupees, the lowest trading permissible limit for the day. This comes after the stock had already crashed 5% and hit the lower circuit on Thursday as well. The sharp fall is triggered by serious concerns raised by the Securities and Exchange Board of India in an interim order. SEBI has alleged that Rajesh Exports prima facie inflated its consolidated revenues by more than 15 lakh crore rupees over 5 years, from FY21 to FY25, by attributing massive revenues to its overseas subsidiaries, particularly the Switzerland-based precious metals refiner Valcambi SA. According to SEBI, the company reported consolidated revenues of around 15.18 lakh crore during this period. However, nearly 99.8% of these revenues attributed to subsidiaries could not be reconciled with Valcambi SA's audited standalone financial statements. Valcambi's actual revenues, as per Swiss law and audited by KPMG, were only a fraction of what was shown in the consolidated figures. For example, just around 543 crore in 2023 compared to 2.8 lakh crore reported at the consolidated level. Joining us on the broadcast is Dr. Sharath Kohli, Senior Economist. Thank you, sir, for taking out your time and for speaking to NewsX. Dr. Kohli, we want to understand that the shares of gems and jewelry major Rajesh Export continue to witness a sharp selling on BSE and NSE. This is due to this pressure that has been put on them. Take us through your observations of this, sir.
Good afternoon or good evening, Ms. Shivani. I think it's been quite a disappointment for the investors of Rajesh Exports, people who were holding shares, and with the shares holding lower circuit. There are different lower circuit limits for different shares. So for Rajesh Exports, it's 5%. On some of the shares, it's 10 and 20% also. But for shares which are not traded in very high volume, the circuit is kept lower. So I think it has caused a great loss to investors. And I personally feel that the auditors should be held accountable, because when consolidation of accounts is done, you tend to report the revenue correctly. You cannot be including the revenue of overseas subsidiaries in your local accounts, which needs to be reported separately, and there has to be a qualificatory remark in the audit report. So I think the stock exchange, SEBI, I'm sure they're going to take action on this, and the auditors must be held accountable, the Indian auditors, because Rajesh Export, the Indian auditors have certified the accounts, and 15 lakh crores in 5 years, which means almost on an average 3 lakh crores per annum. If we divide it on an average, that's been the inflated revenue. So this misled to companies' health, financial health. Obviously, the investors, they tend to look at how much is the company's top line and the bottom line. So this is giving a wrong revenue actually, and on the basis of which the investors have invested money and bought shares. A lot of bankers must have dealt with Rajesh Exports. A lot of vendors must have dealt with Rajesh Exports. So everybody is disillusioned today by what has happened. I think to prevent this from happening in future, I would suggest SEBI and stock exchanges to have stricter norms on reporting of when they file their results every quarter. It is important to note, Shivani, that every quarter a company is required to file the quarterly accounts. In the stock exchange, I think this reporting norm should be strengthened, so that no investors are misled in future. I think a lesson should be taken. But it's very surprising and shocking that such a level of, I would say, miscalculation or misleading facts can be presented to the investors in general, as the public limited company is responsible for all that.
Dr. Kohli, I also want to understand from your perspective, what do you believe will be the play out going forward for Rajesh Exports Limited, and also, like you mentioned, if some action is taken, against this company, then how does it play out?
I think the action would be taken on the auditor, Shivani. Action would also be taken on the promoters. And I think the action would be taken on the auditors. Action would also be taken on the promoters. because the numbers basically come from the promoters. And I think because if you delist the company from here, the investors would be at a loss. So the penalties may be imposed on this company. Extreme action would be to delist the company, and cases should be filed against that for fraudulent reporting. That's what I feel.
All right. Thank you so much, Dr. Kohli, for your perspective on this issue. With that, viewers, we are slipping into a short commercial.